Have you ever wondered what the price of gold would be if we went back on the gold standard? Today we'll be getting out of the factual and into the hypothetical. Let's get into it. Hello my fellow YouTubers and welcome to PapayCast, the channel where you get the information you need today to prepare for the economy of tomorrow. Today's episode is going to be a fun little thought exercise. We're at the start of 2021 and the valuation of a lot of things has come into question. Whether it's gold, Bitcoin, the stock market, or real estate, it's getting harder to come to a wide consensus on where valuations generally should stand these days. Part of this is the problem of the amount of money the Federal Reserve is printing right now, and whether or not that is inflating assets substantially without it showing up in actual inflation. I look at the price of gold and ask myself sometimes, is that price accurate? If we went back on the gold standard that was abandoned in 1971, where would the price of gold be set? The main idea behind the gold standard was to back up our currency, the dollar, with something that everyone valued, gold. This has been done in different contexts for thousands of years. It's a way of saying that our currency has a guaranteed value. And this was intended to build and maintain confidence in our currency. For nearly 40 years, the price of gold was set at $35 per ounce between 1934 and 1971. If we went back on the gold standard today and wanted to account for every dollar in existence, it becomes a simple math problem. The Department of the Treasury website shows that the U.S. has 261.5 million ounces in gold reserves as of December 24, 2020, the largest holdings in the world. So that's our supply of gold. For our measure of the supply of currency, we're going to use the M2 money stock figure from the Federal Reserve, which isn't exactly a measure of every dollar in existence, but for this video, it'll serve our purposes. As of December 21st of 2020, the M2 money stock was about $19.2 trillion. So we divide the roughly $19.2 trillion M2 money stock by the 261.5 million ounces of gold in U.S. reserves. And we see that in order to back each dollar the Fed has printed, the price of gold would have to be set at about $73,000. In contrast, the current spot price of gold in the market today is a little over $1,900. It's a pretty big difference. And something tells me we won't be going back on the gold standard anytime soon. If you've enjoyed today's little thought exercise, please give this video a thumbs up, and I hope you will consider subscribing to this channel so we can continue to deliver you more valuable insights about the economy, an occasional thought exercise, and how it could impact your life. If you didn't find it useful, go ahead and give it a thumbs down and let us know in the comment section below that I should keep my thoughts to myself and only release videos on how to outsmart the Federal Reserve's printing operations and come out a millionaire on the other side. Either way, I'll see you in the next video.